Which is the best dividend stock to buy? AT&T, Exxon Mobil, or the Home Depot? I'm going to answer that question in this video, comparing the three dividend stocks across 5 different metrics. So let's begin right now, starting with the dividend yield. Looking at this metric, AT&T offers the highest dividend yield at 4.34%. ExxonMobil next at 3.27%, and the Home Depot the lowest at 2.67%. But remember, when you're investing in dividend stocks, it's not just the dividend yield you get. You also get the potential for capital gains return. That means the change in the stock price over the time you own the stock. All three of these stocks have the potential to increase in price and decrease in price, which can supplement your dividend return, either make it higher, make your total return higher, or make your total return lower. So in addition to the dividend yield, we have to include the potential for increasing stock prices or decreasing stock prices when we're investing in dividend stocks. So one of the crucial metrics I like to consider when I'm investing in dividend stocks is year-over-year annual revenue growth. And looking at this metric, ExxonMobil has exploded, of course, as a result of higher oil prices after the invasion of Ukraine by Russia. This is not sustainable. This is just a short-term boost in energy prices as a result of that. If we look longer term, let's say 10 years from now, I don't know where oil prices are going to be. Governments worldwide are incentivizing their constituents, their residents to buy electric vehicles with incentives, tax rebates, all of these things. So I don't know the sustainability of higher gas prices as we evolve into this energy revolution. Now, I don't know how that's going to result. We certainly need more oil in the near term. You can see that by looking at gas prices where you live right now. They're much higher than they were 2 or 3 years ago. So we certainly need more supply in the near term. However, longer term, how much more supply we're going to need remains a big question mark. And we have Home Depot at very nice revenue growth. Home Depot also surged during the pandemic as home improvement was a popular pastime. And over the longer term, Home Depot has grown revenue at a compounded annual rate close to 8% in the last decade. Meanwhile, AT&T is finding revenue growth more difficult. It divested a large part of its business, which caused revenue to decrease as it divested that business. Over the longer term, investors can reasonably expect AT&T to grow revenue in the low single digits. It's operating in a mature industry, not very many new customers to capture. The main way AT&T will grow revenue is by attracting more business from existing customers. The next thing I look at is cash flow from operations to sales over the trailing 12 months. This shows me how good the company is at turning sales into cash flow. And looking at this metric, AT&T has consistently been the best at a cash flow from operations over 20%, 24.8% to be exact in the most recent trailing 12 months. ExxonMobil has gotten better in recent years as the price of oil has increased. However, longer term, it's closer to Home Depot in terms of this metric, the cash flow from operations, although Home Depot has fallen lower in recent years due to a couple of factors. Namely, the economic reopening has not been great for Home Depot. People spent so much on home improvement during the earlier stages of the pandemic that now they're shifting their spending to more away from home things like restaurants, travel, bars, theme parks, ball games, things like that, things that they want to do outside of their home. And that's not really good news for Home Depot right now. Another thing I like to look at is the operating profit margin over trailing 12 months. And I like to look at this over the longer term to see if there's any trend, to see if any fluctuations are happening. And with this metric, what I notice is that ExxonMobil had been on a downward trend over the last decade until the boost in oil prices led its operating profit margin to surge higher. Meanwhile, AT&T had steadily been increasing its operating profit margin. The same goes for Home Depot. Both of them had been increasing their operating profit margin over the last decade, and they've been getting better at doing what they do, cutting costs, adding more profitable segments, and things like that. So finally, I like to look at valuation to determine, if yes, there is a company that was clearly the better performer. I want to see how much more the price of the stock is to compensate for that better performance. So looking at the metrics that we looked at in this video, there was no clear winner across the board. There was no clear company that had the clear advantage on all the metrics. So for that reason, there shouldn't be one stock that is so much more attractive than the others. And that is the case here. You have Home Depot trading at a forward PE of 18.4, ExxonMobil at a forward PE of 10.4, and AT&T at a forward PE of 7.8. Um, Out of these, AT&T had the um, near-term prospects of revenue growth being the lowest. ExxonMobil had the best near-term prospects for revenue, although longer term, ExxonMobil had maybe the worst outlook for revenue as its industry is actively being attacked by governments worldwide trying to switch from oil consumption to electric consumption, at least for cars, that is. And then Home Depot had the near term headwinds from the economic reopening, but longer term was doing the best in terms of revenue growth near double digits. And that should be sustainable because home improvement is not going anywhere. Look, we live in homes. We're going to continue living in homes for the foreseeable future. And these homes are going to need maintenance. They're going to need upgrades. They're going to need adjustments. And Home Depot is the leader in that industry. The home improvement industry is valued at 900 is estimated to be generating $900 billion in sales annually, and Home Depot is the largest player in that field. So it's a lucrative industry, and Home Depot is the best in class in that industry. And so, for that reason, out of these three stocks, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick Home Depot as the best dividend stock to buy. All right, so that's all I've got for this video. Thank you so much for watching. Please click on one of the videos that are popping up on your screen right now. I've picked those specifically because you watched this video, right? So I think you'll enjoy those. Please click one of those. I'll see you over there.